Welcome, everyone. I'll just warn you that just as I hit the button to start the program, I heard a big clap of thunder. So I hope that we don't have any problems here in Philmont, because we do have an issue with sometimes losing power. But if we do, I'll try as quick as I can to get right back on. And hopefully our panelists will have the power to keep the thing going. Zoom is a little confusing to me sometimes. My name, by the way, is Toby Farley. I'm from the Philmont Public Library. I'm representing the Columbia County Libraries Association, which makes up 11 member libraries in Columbia County. And we are very excited and happy to be working with both Habitat for Humanity and Greylock Federal Credit Union for this series of webinars for you. So I'm going to open up to Al, who is the director of the Columbia County Habitat for Humanity.
Thank you, Toby, and thank you everyone out there. By the powers granted by the technology gods, we can't see any of the wonderful folks who are participating in this program. So we'll just say hello, and we look forward to to presenting some information tonight that we know there's a lot of appetite for and a lot of desire to learn how to get on the how to get on the path to owning your own home. We're really happy to partner with the Library Association and the Philmont Library and Greylock and the others who are helping to sponsor our Habitat Helping Hands program. This is the education part of that program. So Stephanie and Tia are going to give the bulk of this program tonight, but I wanted to set the context for what this financial homeowners education series is about. Habitat, and I'm going to, if you could let me share my screen. Is that working, Toby?
I'm not seeing it, but you should be able to use that share screen button down at the bottom.
Yeah, let's see if that works. So
I'm not seeing anything. There you go.
There you go.
Yep,
looks good.
Alrighty.
Yes.
Perfect. So a little bit about Habitat for Humanity. If you're not familiar, we'll be 30 years old in 4 months as we come to the end of August. We've built 25 homes in just short of 30 years all around the county. Maybe many of you have volunteered for us in building or in our restore or on our repair projects. We build homes for low-income families in partnership with those families. And we also provide critical home repair, accessibility work in homes and homeowner education services, of which this webinar is part. What we do is, again, we help qualified families get on the path to home ownership and to building home equity and building wealth. We offer home buyer education as part of the purchasing process, so that we work in partnership with our families to make sure that they are ready to be a homeowner. Many of the families that we work with don't have a history of home ownership in their background, so we make sure that those who are looking to buy a Habitat home are fully prepared to be a homeowner. And what we offer is a safe, affordable home that people can call their own and get off the rental path and get into into being a homeowner. Our next project will be in the village of Philmont. We have a property that we've owned for a couple of years and have gone through the process of getting it approved for not one but 2 homes, a duplex townhome of the type we've built in the county over the last 10 years. We're currently doing the construction, engineering, and cost analysis to make sure that we have everything that we need to have to begin the process. We are hoping to open applications for families who want to participate in the Philmont project and other projects going forward in the fall of 2022. We don't want to open it too early. So we're just waiting until all of the pre-construction work is done and tucked away. We'll look to break ground after the frost is out in next spring, and it usually takes us about a year to complete building. This is the site in Philmont. If you know Eagle Street, it's up off Main Street. It's sort of a little peninsula triangle, and at the top of the hill is the parcel of land that used to be the town DPW site. We have 2 homes. We're going to split the parcel, and the homes are going to be on the Eagle Street side. And this is a schematic drawing that looks at the site. We will be sharing more with the community as we move forward in the pre-development process, but we're excited to get building again. It's been a couple of years since we've built our last homes, and we're just settling new families into our last build as we speak. So we're looking forward to partnering with the great people in Philmont and getting some more families into new homes. So who's eligible for our homes and how does this work? Under affordable housing guidelines, and we follow federal affordable housing guidelines, we look to put families who are qualified, in terms of their income, into a homes and not spend more than 30% of their gross income on housing. So with the numbers moving every year, right now for a family of 4, the income range is up to $65,000 for a family of 4. But we work within a band that covers above that a little bit and below that as well. To be eligible, you really just have to meet 3 specific needs: that you have a substandard living condition now, that you do have income to be able to pay a mortgage because you will be a homeowner and you will need to qualify for a outside mortgage, and you have to be willing to partner both in the education process and in building your own home. And what could be more exciting than building your own home? Our application process again is on our website. So this is a page from our website. If you'd like to go to columbiacountyhabitat.org, you will see all of the information you need to know for when we open up our application process. We're going to be updating this a little bit by the time the application process opens up, but it really describes how you need to prepare. If you have any questions, please feel free to call me in the office, and that's at 518-828-0892, or check out our website, newly redesigned and spiffy, at columbiacountyhabitat.org. And so now I'll turn it over to Stephanie and Shanatia, and they'll take us through how to prepare. How do I prepare to be a homeowner? What do I need to do? What do I need to understand? It's a great education portion that they'll share, and you'll learn a lot. So take it away, Stephanie.
Awesome. Thank you, Al. Thank you, Toby. So we'll just get this queued up here. So welcome this evening. Thank you guys for taking your time tonight to come sit with us. So as Al mentioned, so we're from Greylock Federal Credit Union. Part of our goal is to help educate our communities, and financial literacy is one of the things that unfortunately isn't readily available or taught even from school age, but as adults, I'm sure everyone got the handbook on how to be an adult and how to navigate all of the financial trials and tribulations that we all just experience or unfortunately maybe flounder through. So one of the things that we thought was a key component of being a successful homeowner is preparing yourself for that process. And so through this partnership, we're able to provide some financial literacy. And one of the pieces is tonight's presentation. We're going to go over a little bit in just a couple minutes about that. But the next pieces will also involve things like budgeting and credit, and what are those importance? What's the importance in this whole process? So, again, I'm Stephanie. My name is Stephanie Martin. I'm a financial wellness coach with Greylock full-time. So my role in the credit union is actually education, sitting with people one-on-one for budgeting and credit, helping people with debt management, weighing whether consolidation is important, education within the schools. We have a Bonsai financial literacy program that's free to our area schools. So, we're proud and thrilled to be able to give this presentation for you tonight. And I'll let Shanatia give her introduction.
Hello, everyone. I'm Shanatia Bygrave. I'm also a financial wellness coach, like Stephanie, but I'm also the branch manager for our Greenport Hudson Greylock Federal Credit Union branch located on Fairview Avenue. This is a great part this is what I love about my job, is being able to educate not just myself, but also local families that need this information. Like Stephanie said, we didn't all get that handbook,
I was out that day.
Yes, exactly. So this is just an amazing experience, and I'm glad that you guys are able to join us, and looking forward to your bright future and to walking into your own homes.
Excellent. Thank you, Tia. So now we want you to know that this is your presentation. This is your workshop. So we want you to be able to feel free at any time to pop your questions in the chat. We'd be happy to answer them when we have pauses or breaks. So as they come up, feel free to throw those in the chat, whether it's for myself, Shanatia, or even Al or Toby. Just throw those in the chat as we go. We welcome your questions. So tonight we're going to just talk a little bit about the importance of credit. I'm sure you can imagine why, but we want to really hit that home with you. Making sure that you've either started building savings or thinking about building savings, and why. Making sure a home is affordable. We don't just want to get you into a house to call home. We want you to be able to stay in it. So we're going to talk about making sure that you're considering all of those financial options, preparing yourself for emergencies and unexpected costs. We're going to talk about, things to just keep in the back of your mind, or maybe, just to consider, mapping those out in case you have these crop up, which they will, as a homeowner myself, I know. And then a home is really an investment. It isn't just something that you buy off the shelf, right? This is going to be yours, hopefully, for your lifetime and maybe future generations. So you want to make sure that you are adequately protecting yourself and your investment. So I want to start off with mentioning to you, I'm sure you know someone in your life that maybe has borrowed a pen or a pencil and maybe never gave it back. Think back, right? No names. Maybe that person hasn't returned that pen or pencil. So maybe after once or twice, this isn't going on, how we feel about you as a person. But would you be likely to give that person a pen or a pencil, maybe the second or third time they're back for another, because they haven't returned the first couple? So their reputation may tell you no. They will not return what they borrowed. So imagine if you're hesitant on lending that person a pen or a pencil in the future, you can imagine on a bigger scale, your credit reputation is even more vital when you're preparing to purchase a home. That home purchase is a much bigger risk to a financial institution than a simple writing utensil, right? So just keep that in the back of your mind. We also want you to think about every time you've gone to, check in on yourself financially, it's important to know where you stand. A lot of times people will, come into a financial institution and look to borrow and have no idea where they're at. So if you're unfamiliar with a financial wellness checkup, you can check in with a financial wellness coach. Greylock provides this as a free service to our community in general. But think of it just like your doctor visit. If you go to the doctor, annually for your checkup, you go to the dentist, it doesn't mean that you have to have a problem. It just means that you're checking in at least once a year, do a financial wellness checkup. You can also access your free credit report through the 3 main bureaus, Equifax, TransUnion, or Experian. And basically, you can go directly to their websites or even through a website called annualcreditreport.com. It may not give you your score, but it actually will give you access to one of the 3 bureaus. So you have choices. And a lot of times credit card companies that you may already have can offer you, credit score tracking, as well as, part of that service with your account. I can't stress enough on-time payments, right, Shanatia? On-time payments are one of the biggest pieces of credit. It is very difficult to recover from a late payment. Doesn't mean that it's impossible, but this is where it's super important. If you're off track with even one, we need to reassess where things are financially. Lenders want to know how well you're paying your bills. As you may know, most loans have a grace period, which is typically maybe 15 days. You're considered on time within that grace period. They may assess a late fee after the grace period is done. However, you're only reported late to the credit bureaus with a 30-day late payment, after that 30 days is up. So it doesn't mean that it's a good thing if you're getting the late fees, but by all means, try to avoid being 30 days late. With credit cards, however, you can be reported as 30 days late with just being 1 minute past your allowed deadline. So for example, if 8 p.m. this evening, Eastern Standard Time, you paid at 8:01, you're 30 days late. So on-time payments are absolutely crucial. Cleaning up those unpaid and charged off debts. This shows that you mean business about improving your credit by paying off all of those, outdated or charged off items. So choose one item at a time, maybe consider paying it off in full, maybe work out a payment arrangement to start knocking down that balance until each one is paid off. It's possible that you may need to have a deeper dive into what's happening on your credit report to make an educated decision on what to do, but make sure that you just start somewhere, right? And then lowering your revolving utilization. What does that mean? So you become riskier to the creditors when your revolving balances, so like your credit cards or lines of credit, when the balances increase. So keeping those balance, that utilization, so how much of that percentage are you using out of your limit? So keep it lower than 25 to 30% of your credit limits. That shows responsibility. So likely when you're keeping your card balances low, you're not relying on your credit cards for spending, and you would have flexibility in the event you had to use revolving credit for an emergency. So anything paid with revolving credit, you should be able to pay it back within 1 to 2 billing cycles. It also saves you money in the long run, right? All right. So being rich in credit history. So that's basically where, anything you have open and active. So between credit cards and loans, anything that's open and active is your active history. And so making sure, don't be in such a hurry to close out old cards because you can lose all of that credit history. It's kind of like your 3rd grade report card. Some of the old stuff isn't necessarily, bad. If it's in good shape, you may want to hold on to it for a while if you can. And then, installment and revolving credit. So auto loans, mortgages, of course, personal loans, student loans also have those mixed with revolving credit. So again, lines of credit or credit cards. It shows you can manage and juggle the 2 pieces. Also consider new credit. So one of the things as a mortgage lender, lenders don't want to see that you're applying for a bunch of things just prior to a mortgage application because you're showing risky behavior. So you want to take those things into consideration. What am I applying for today? What's the benefit today? What is it going to affect down the road? That's a lot of times credit is how is this going to impact me in the future? So it doesn't mean that you can't apply for things, but be strategic. Be careful at the holidays, especially when you're at the checkout and they're offering you that 10% discount at the checkout while they're not telling you they're going to charge you 22% interest on the card. And if you don't pay those balances back quickly, it can really have a negative impact on your credit. So just be cautious on those things. And then at the bare minimum, like I said, if you're doing your annual checkup, you're going to make sure that everything on your report is accurate. So when you review your report, it's possible you may find errors that need to be corrected. Maybe you paid something off, it's still showing up. Maybe the balance is reported as one thing, but you know it's something different according to your records. Maybe there's something on your credit report that's not even yours at all. Or maybe in my case, you may even find someone that you used to share living quarters with was supposed to switch out a utility into their name and didn't. And so suddenly you have a $700 phone bill that you are stuck paying because it's on your credit report because you lived there. You could find, some of these things that they just need to be removed because they don't belong to you. So make sure at the bare minimum, everything on your credit report is accurate. Okay, that's why it's important to check at least once a year to make sure everything is in order.
Stephanie, can I ask a quick question on that?
Absolutely.
How do you check your credit score? What's the best way to go about that?
So as I mentioned, visiting any of the 3 major bureaus is good. So, Experian, Equifax, and TransUnion, you can typically go there, but that's okay. But also, and we'll talk a little bit more about coaching towards the end, we can sit down with someone and review their credit report together. Like, especially if you've applied for any type of lending, you can ask for a copy of the credit report. You can, generally review that together. And at least the score, some of the credit card companies may offer you score monitoring. I will throw caution to the wind. There are a lot of apps and services, things like Credit Sesame, Credit Karma. They use their own scoring system. So use them with caution. We've had people who've had a discrepancy in, the actual bureaus that lenders use. The score will be different. So if you're checking in general, you could use one of those services. They're pulling from the main bureaus, but they have their own scoring system separate from the bureaus. So there's a variety of ways. Great question. And then if you don't know either where to start building credit or rebuilding credit, we've all been there, right? I can tell you as an adult, I've had to rebuild my credit a couple of times based on lifestyle choices, based on job losses or household changes, births, deaths, that kind of thing. But if you want to basically get started or restarted, think about maybe a credit card. Credit cards are pretty easy to get started with. You might be able to consider a secured credit card. That's basically where you deposit money in a savings account. That becomes your credit limit. And so you're showing that you mean business instead of borrowing from a lender. So you're building that reputation over time. So keep that in mind as well, that it's not going to be overnight. If Tia and I had an easy button and everyone would come to us, right, to help them build quick credit, that's not how it works. So for example, with a secured card, you deposit money in the account. So for example, if you had a secured card with a $500 deposit, that's your credit limit. You use the card just like a traditional credit card for your monthly purchases or payments, but choose things that you typically spend money on because it's already in your budget, right? Keep your balance below 25 to 30% usage. So out of $500, that's only $125 to $150 in this case, out of 500. You don't want your balance going over that. This can ensure that you're not a risky spender. And then you're going to make sure, like we talked about, make sure those payments are on time every month. You literally could do a $50 phone bill every month, pay the phone bill with the credit card, pay the credit card bill when it comes in. Easy, right? You could also consider using Experian's Boost program. Essentially, it's an opt-in program that it allows you to connect your bank account. So through your online banking, it identifies utilities and telecom payments. So it can be things like even Netflix, your phone bill, your gas bill, your electric. It has to verify data and confirm that you want to add it to Experian's credit profile. And you get an updated FICO score delivered in real time. Now, it has to be a service that's in your name, and the account has to be in your name. So there's little, make sure you have to follow those rules basically. And then some financial institutions may not allow it to link to your banking system. So confirm that information. When you go to create your login, it'll actually have you list your institution. And if it's on that list, then you can continue. So that could potentially help. It's not going to take the place of a good credit line. Before I forget, I did miss the authorized user. If you know of somebody, preferably someone close to you, maybe someone in your household, that has good credit on a particular credit card or credit line, you may be able to be added as an authorized user. Now, that doesn't mean you're financially responsible for the line or the payments. So you could potentially just be added and ride the coattails of that person who's got the good credit with that credit card. Make sure that it's good before you get added, because it could negatively affect you. You don't even have to carry the card if that's the case. So that could be another option to help boost up your credit.
Can I interrupt one more time?
Absolutely.
I just sent my son to college, and this is an issue that we're having. So is that a good thing to do for him?
Potentially. Yep.
He had said something about that right before he left, about a friend having.
It could be a potential. So number one, you have to make sure the institution allows for that. Not all of them do, because it's a risk. You're adding another person on, but it is possible. Again, if you want him to have a card, I would definitely make sure to set some parameters of what he's able to do, because it will affect you as well if he spends out of control. You could, if he just wants to have the available credit but not have the risk of the card, you don't even have to give him a card. You can just keep it in a lockbox at the house. But as long as the performance with that credit line is good, it doesn't matter your other credit lines, only the one he's being added to, he could benefit from that. Absolutely. Yep. Great questions.
Thanks.
You're welcome. Delinquencies. We want to avoid being late, right? Delinquencies stay on your credit report for about 7 years. Most public records can remain on your credit report for 7 years, although bankruptcies, some of them may extend up to 10 years. So you want to just be careful, what is going to show on there. When you're assessing what to do with, do you pay off an old debt? Do you settle? Do you make payments? According to Experian's website, settling accounts for less than the full amount you owe, it can harm your credit score. Anytime you fail to repay a debt as you originally agreed, it can affect your credit. But that said, the negative impact of settlement is less than the negative impact of not paying a debt at all or declaring bankruptcy. So sometimes, you want to weigh your options. I'm not going to tell you what you should and shouldn't do. We can give you options. Maybe if you've got $1,000 credit card debt and you might be able to settle for less, it is a potential taxable event because you've not paid the full balance. Keep that in mind. But if you have the ability to pay it off over so many months, that may be the better option. Sometimes people have like a $10,000 credit card balance and it's just not feasible for them to pay it off in full. You could offer something less. Again, it may be a taxable event. Check with your tax preparer on that. But it may just help move that debt to the side. So now you can move forward and work on building up that credit again. And then just use caution when you're getting those credit card offers. Just because you got it doesn't mean you should apply for it. Ask yourself, if I apply for this credit card today, what are the benefits? What am I risking? If the risks outweigh the benefits, then don't apply. We just were talking about that 10% offer. It sounds exciting at the checkout, but oftentimes, you know, that when they're offering you that 22% interest rate or that 26% interest rate, and you're not able to pay it off next month, now you're starting to pay more for something that you spent last month, right? And remember, all credit inquiries. So if you've applied, not just you got a credit card offer in the mail, if you've submitted an application, every one of those inquiries remains on your report for 2 years. That's kind of like your report card saying, ooh, why did you apply for 6 credit cards in this short period of time? Lenders want to know. They're going to be concerned. So when a lender sees that, you know, you've shopped around for a car loan, it doesn't mean you're going to shop at 4 places and buy 4 cars. You're shopping for a rate, but you could potentially, you know, get approved for all those credit cards. So just be careful on that. The other thing to keep in mind is if you've applied for something and were denied, applying for another loan or another credit card and getting denied again doesn't fix the problem. You may need to address that. Okay, so just be cautious on that. All right.
Thank you, Stephanie.
My pleasure.
Absolutely. So now that you've learned how to establish credit so you can get that loan, the next step is saving for that down payment for that new home. Many times home buyers have not saved enough money in general when they're looking to purchase. So the biggest part is not just your credit, but making sure you have the funds ready once you've decided on a home. Considering a down payment is typically about 20% of the sale price of the home. So let's say you're looking for something for $175,000. You are looking at a minimum of $35,000 just for that down payment. So when you're planning to make that purchase, you want to make sure that price tag on that home fits what you're able to afford when it comes to the down payment, but also for your monthly payments. A lot of times, you know, we find a home, it's beautiful. One of the biggest part that a lot of folks, believe it or not, skip over is that inspection. And knowing that, and they skip over it because one, they didn't include it in their budget. They thought, oh, it'll just be an appraisal. But not necessarily. Inspections are very important when you're looking to purchase your home. So you have to think about the cost of inspections. You have to think about what that takes, and the fact that it's important, that's something you should not skip over or avoid. So before you schedule a closing, the entire home has to be inspected. The inspection fee could be from $350 to $500, believe it or not. I'm looking to purchase a home now, and I had to pay $550 for my inspection today. So it's very important that you're saving for thinking about all of these things beyond the down payment. If the inspection fails, you might end up, you're gonna lose that money, right? You're not gonna end up buying that house because the inspection failed. Unfortunately, you know, you can't get that money back. So when you find another house, you may have to be responsible of paying that inspection fee again. So the important part is making sure this is the home that you truly feel like this is the home I want to purchase. And, you know, making sure you save enough. If that house if it fails the inspection, you're ready to say, okay, let's continue to look, or talking to the borrowers to see if they can make deductions. And, you know, sometimes you can work things out with the seller to reduce the price of the home if you have to find yourself fixing any major issues in the future or prior to moving in. Think about, does this home have a septic system? You may encounter another inspection issue or fee if they have to then test the sewer and test the well water. That's additional cost that is added that can be around $125, depending on the company that you're using. They all have their own price range for these things. So it's very important that you think about these costs when you're thinking about home ownership and what the importance of saving. Then we think about the repairing and the improvements, and what that takes. But before I get there, I want to go back to closing costs. Usually there will be a closing costs, legal fees associated with it. You have to pay the attorney, you have to pay the taxes. You have to pay for the appraisal. There's so many different aspects of the closing costs that comes all together. You have to think for that closing cost between the range of $5,000 to $10,000. So that's on top of that $35,000 that you're already saving for the down payment. Then you have the inspection that can be between $350 to $600. And then now the closing costs between $5,000 to $10,000. You're already looking close to $50,000 already when you're thinking about this home purchase. This is why it's important to save. If your new home is heated by oil, if your oil tank was filled between the time your offer is accepted, your closing date you might be responsible to refund the seller for the remainder of the oil left in that tank. So it's important that you think about that as well if you're looking at a home that uses oil. It could be just a couple $100, or if it's a larger tank, it could be $1,000 alone just to pay for what is left in the oil when the seller sell you their home. Then we have to think about repairs and improvements. We have to think about all those things that comes with the home ownership, right? Unlike a vehicle warranty, there are no homeowner warranty or guarantees that something that will guarantee if something breaks within the first year of you owning the home. You want to be prepared for repairing that breakage. It could be a new gutter. It could be, windows. You want to be prepared for that possible home improvement that you need to do. You kind of need to have an emergency stash. And I'm going to repeat that because it's so important to know. How many of you really already have an emergency stash? This is not just for home, people looking to purchase a home, but even for you as a renter, if you're a renter currently, we all really should have an emergency stash. And how many of us really have that? The average American does not even have $400 put aside for emergencies. Think about that. With a house, you have to think bigger. Higher costs for repairs or expenses may pop up anytime. So $400 that an average American cannot even save right now. Can you imagine owning a home and the bigger expenses that you will have? Thinking about if you should be out of work, planning ahead for those expenses. They say you should have 3 to 6 months saved for your the cost of just living in your home. Although many of us do not want to be reminded of the repercussions, of the pandemic, we all went through that just yesterday, feels like, but we need to think about the possibility of this happening again, right? Putting away extra funds in case is very important. And when you become a homeowner, you're thinking about being a homeowner, you want to make sure you're saving 3 to 6 months of what that cost is, for that home. That's the mortgage, that's repairs, that's, the heat and the oil, the electric, anything that you have to come out of your pocket to pay for your home, for the, not so much cable, because that's not a need. It's something we just want, but, think about the necessities that you need for that home, for your home, that you want to make sure you're saving. You can go to the next slide, Stephanie.
I just want to add to that, if I can too, that, Shanatia's point of, save, save, save absolutely is important. Are there programs that might be able to help you with a down payment? Potentially, maybe a grant. Are there first-time homeowner programs that, you might not need as much upfront? Possibly. We're just trying to make sure we prepare you for the potential. The last thing you want is to go, that's the house that I want. It's in my affordable range, and then have a financial institution say, well, you need more in savings, right? We just want you to think about those things and prepare yourself really for that investment.
And it's important also to note that that's why we're having a housing affordability crisis. Certainly in our region, but really around the country it's not just the cost of purchasing a home, it's everything that's associated with it. And it's one of the reasons that Habitat works the way it does is, this is all critical information for potential homeowners to know. If you do qualify for a Habitat house and are chosen as a family partner, a lot of these costs are covered.
Which is tremendous.
In terms of the down payment, the closing assistance, the need for inspections. With a new home, most banks will waive the inspection requirement because it's built as new. And certainly a new home will come if you buy a home in New York State with a homeowner's warranty, where the basic systems of the house are covered for a period of time. So it's why we are ramping up our ability to build more houses over the next few years. Is this really is, what we're trying to do is provide a less costly path for those who need it most. So there's only so many houses and so much need. This is critical information to understand, but also know that there are some opportunities to help defray some of those very real expenses.
Which is fabulous. I'm so thrilled that you guys are able to offer that in the Columbia County area. So fabulous. Thank you, Al.
Absolutely, I agree. And it's a wonderful thing to have Habitat create such a wonderful program and to be able to do this for our community, not just in Columbia. This is something Habitat has been doing for, what did you say, Al? You're going on 30 years? So
30 years in Columbia County and about 50 years nationwide.
And it's a beautiful thing. It's a beautiful resource to have. And those who are fortunate enough to be selected and be a part of it, really appreciate how much you're saving individually and how much, Habitat is doing to give you that home. The other part of this is thinking about how much house you can afford. How much house can you really afford? It is a good idea to plan for how much house you can afford rather than start on a home tour or be disappointed because you cannot afford the one that you fell in love with. Think about what your budget is. What is that plan? Through Habitat, they're helping you to get to that place. But if you don't qualify, to get the resource that you can get through Habitat doesn't mean you can't do it on your own. So if you're planning to do this on your own, if you don't qualify through Habitat, this is good information to still know that you have the 28% and the 36% rule. A good rule of thumb is using 28% and the 36% rule, which states that you shouldn't spend more than 28% of your monthly gross income on home-related costs. This can include the principal and interest on the mortgage, insurance, and possible homeowners association dues if the home is in a development. And only spending up to 36% of your total debts, including your mortgage, credit cards, and other loans like auto loans, student loans, alimony, and child support. You don't want to spend more than that. Many people do not factor in their other debts when thinking about an affordable mortgage payment. So it's important that you think about your total debt for your home when you're doing the math. If your annual salary is $40,000, That means you should spend less than $11,200 annually, or up to $933 per month on home-related costs. Or or $14,400 annually, or up to $1,200 per month, including your auto, student, credit cards, and mortgage payments. For salaries totaling $80,000, it should be less than $22,400 annually, or up to $1,866 a month on home-related costs, or $28,800 annually, or up to $2,400 per month, including your auto, student loan, credit cards, or mortgage payments. Is that a realistic number for you? How much do you bring in yearly? And doing that math, that 28-36 rule is very important, so that you know what is a comfortable place for you when you decide on a mortgage and what that payments should look like for you. Neighborhood condos and fees, you have to think about that. Are you considering a neighborhood development or condominium where there may be fees associated with the location, like maintenance fees to keep the grounds and the roof, and maybe activities and all those things you have to think about. They have fees for those. You have the homeowners association fees. If you live in a development community, they have the dues that you have to pay monthly. So, and that includes the roofs, different things. If you find a place that's in a HOA, the term that we use, you want to ask, what does those fees cover? And really look at your budget and see if that's truly the home you want to buy, and if that's where you want to have it, because sometimes it's worth it to pay HOA fee, sometimes it isn't. So you really want to know what it truly covers for you and your home. Budget your lifestyle expenses. Think about the lifestyle you are comfortable living, or maybe the one you want. Will you be able to balance a mortgage and a car at your current monthly payment? What about satellite TV, cable TV, internet services? Do you like eating out regularly? Think about those things when you're considering your budget. You're thinking about, how much home can you afford? Calculate everything that you normally do on top of that mortgage payment, on top of that car payment, top of that student loan payment, whatever expenses you have. You need to write them all down, create a budget, create something that shows it. So, because sometimes we have to see it for us to really understand the depth of what we're putting ourselves in. So writing those things out, those budget, that monthly expenses that you currently have, and tying it into what you possibly could have with a new home. And does it put you in a comfortable situation where you're not living paycheck to paycheck, or needing to have to get a second job or third job to pay your monthly expenses? Stephanie, thank you. And then you think about the added expenses, right? You have the mortgage, then you have real estate taxes, you have homeowners insurance, you have life insurance, you have mortgage insurance. Each of these I'll go over with you. You think about the real estate taxes. Many lenders will require real estate taxes to be escrowed, meaning you'll have your mortgage payment to pay the loan, and then your property taxes and school taxes, they'll also escrow it into your monthly payment, and build into your monthly mortgage payment. That will be combined. Be sure to research the property taxes in the towns you are searching to move to. Know what their property taxes are, and know what also, if there's a school taxes, what the school taxes are. The taxes can be a make and break on your decision to buy a certain property. So it's important that before you make that decision on a home, do your research, find out what the taxes are. There are also different benefits, depending on your age, that you can benefit for a tax break in the property taxes, but still do your research, find out what that expense look like. Then you have to have homeowners insurance. You know, that is a requirement by the bank. They are not going to give you this loan if you do not show proof of homeowners insurance. You probably can imagine why you would need that insurance. You need these insurance, and you know, because if something should happen to the home, you don't have to come up with whatever that balance is, you know, and we'll go over this more in detail shortly, but just think about that expense that you have to have. It's not you, maybe, it's a requirement. Then you have to think about the mortgage, the homeowner's insurance and life insurance. You probably can imagine that the cost of that. And we'll also talk about that shortly. Then you have PMI, which is called, it's a mortgage insurance, but it is a private mortgage insurance that it doesn't protect you as the buyer, it protects the bank. It's a mortgage insurance that is required, that may be required, depending on, you know, your credit score and how much you put down. Like other kind of mortgage insurance, it protects the lender. If you stop making payments on your loan, the PMI is usually required when you have a conventional loan and make a down payment less than 20% of your home price. A lot of times they will ask you to have private mortgage insurance. So it's important that you ask those questions when you do apply for a mortgage. And a lot of times the lenders will let you know ahead of time, okay, based on this, you will need to have private mortgage insurance. Are you prepared to move over your belongings? You know, think about those moving costs, the U-Haul, you know, whatever you use, you can, you know, are you prepared for those? I know someone told me they purchased a home and they weren't quite ready to move everything in. So they had to get a storage unit. Sorry, my kids. They had to get a storage unit, and that's a monthly cost until they're able to move everything into their new home. So you think about those things, you know, when you're moving, you have to include the cost of moving. The utility hookups, you have to think about, okay, when you set up National Grid, maybe the oil tank was empty, maybe it was really low. You're going to have to fill that oil tank up. So you have to think about those additional expenses because it all comes all at once from the moment you close on the loan, on your mortgage. Stephanie. So we talked about homeowners insurance a little bit, and I said we'll discuss this more. With a mortgage, it is a requirement, like I said earlier, to have homeowners insurance. Homeowners insurance is not a luxury, it is a necessity. It covers structure of the building and protects if anything happens at the house. It covers all of your belongings inside the house. Also, homeowners insurance gives you coverage if you had to submit a claim, for example, fire damage or smoke damage, and have to stay elsewhere. So they'll even pay for you to stay at a hotel while your home is being gutted out and fixed, or while the situation is being assessed. They will pay for you to stay at a hotel or motel or short-term apartment. It provides you with coverage for liability on and off your property. Is someone at your holiday picnic, right? You're throwing a party and they injured themselves. You will be covered. If you're at a golf course, randomly hit someone in the head with a golf ball, requiring that they receive medical attention, and they sue you, you would be covered. A homeowner shared with me once that they had to have some sewer work done between their house and their connection on the road. The work cost them $9,000. With the proper homeowner's insurance coverage, the work was covered after $1,000 deductible. So all they really needed to do was pay $1,000, and the remainder of the cost for that sewage situation was only $8,000, and all they had to pay was $1,000. So it's important that you have homeowners insurance because it truly protects you completely and wholly. Think about flood insurance. You have flood insurance. Homes and businesses are a high risk. If you're in high risk areas of flooding, the government-backed mortgages are required so that you have flood insurance, especially when you're in those high risk areas. While flood insurance is not federally required, if you live outside of a high risk area, your lender may still require you to have flood insurance. So it's important that when you're applying for a mortgage, the lender that you choose, you're asking those questions. Will this be a requirement? And they'll sometimes tend to tell you. And if it is, when you speak to your insurance agent, Greylock does have an insurance agency, but if you have one that you already work with, you can ask those, let them know that you will need these things and they can give you a quote on how much that costs. Then we think about life insurance. I am buying a house. Why would I want life insurance? In the event of the insured party's untimely death, the policy would pay benefits to the surviving beneficiary. If you are purchasing a house together with another person, you should consider life insurance coverage. Ask yourself, if something should happen to one person, can the surviving partner afford to live in that house by them, and afford the cost of maintaining that house? Life insurance can cover the cost of funerals, pay off debts, and pay off a portion of remaining mortgage balances. It can give peace of mind and help in avoiding disruption or losing that investment. Remember in the beginning of this, we said home ownership is an investment. This is your investment. Do you want to lose that investment because you did not have life insurance? So it's important that you also consider getting life insurance along with that mortgage insurance, because the life insurance is not protecting just you, it's in protecting your investment, and it's protecting your loved ones that you're leaving behind.
In general, a lot of our insurance agencies do offer bundle packages. If you did something with, say, car insurance and homeowners insurance, or homeowners insurance and life insurance. So definitely check on the availability of bundle packages and discounts. And our Greylock insurance agency is not yet able to write policies in New York State again yet, but if it's possible that if you find something that might be in Berkshire County or in Massachusetts and you're still living or working over in Columbia County in New York State, there might be something that we could offer to you then, but we definitely can even give you some guidance on some programs to look at or consider when you're looking at insurance.
Absolutely.
Thank you. All right, renting versus owning. I know we've given you a whole lot of information about, what are some of the potentials for added costs. We just want you to be prepared and adequately educated on it. So there's pros and cons. I'm sure you already have thought about them to renting versus owning. So, it's just good for you to carefully consider all of your aspects before you make a full decision. And what may be good today may not be something in 6 months. To just try to be forward thinking and think about those long and short-term goals. So renting, and oftentimes your rent payment includes things like heat, hot water, and electric services, right? The landlord just takes care of all of that stuff. You pay them one amount and that's it. Regardless of how much you use, you just have the one monthly payment. Typically, you don't have to worry about maintaining the property for repairs or upkeep. You just simply report the landlord, hey, I've got a problem. You make a call. For example, you could have backed up drains or plumbing issues, or maybe your appliances stopped working. Maybe you just needed help fixing the front door handle or lock. Outside the dwelling, you may not need to deal with mowing the lawn or raking the lawn or even plowing or snow removal. We live in the Northeast. Unfortunately, we had the longest winter ever. Some winters it's, a foot of snow every couple of days. So calling the landlord to deal with that, it's pretty exciting, right? You don't have to deal with it. Maybe even trash removal. You just put your trash out at the curb and someone else handles that. Owning. It's all yours, right? You get the pride, you get to make your own decisions, you get to do what's best for you and your household. It's a good idea to get what the costs associated with owning that property are going to be. You want to make sure you know what the costs are to heat the house before you actually move in. You can get a sort of like an assessment of what that previous year looked like. You can even take a look at what are the electrical costs, what type of services, the hot water heater, how does that work? Is it gas? Is it electric? You just want to be prepared, right? Maybe you're pretty handy when it comes to maintaining your property. It is a good idea to put aside funds to handle things that maybe you're not able to touch. I know that some people might be good with dabbling with electric. I'm not recommending anything, but I'm just saying you might be able to do some simple things. But keep in mind, there's going to be things that it might require an inspection by the local government, in the city or town that you're in, to take a look at what service was done. So you may have to hire someone. In some cases, maybe you have to purchase a lawnmower or buy a goat. I don't know. It's up to you. Or maybe you have to pay someone to mow the lawn for you. Maybe it's the same thing with the snow plowing or using a snow blower. Hiring someone can be easy, but in the case of our snowy region, think about if winter, we had a winter not too many years back where we had snow until May. It may end up costing you double the amount if snowstorms than usual. So just be prepared for that fluctuation, right?
Absolutely.
And then emergencies. I know Tia mentioned, just be prepared for emergencies. In general, you can never have enough money put aside for emergencies just to prepare yourself. What is one person's emergency may not be the same for another, but we can all agree that being unprepared for an emergency, we end up paying the price financially and emotionally, right? With stress. I don't know about you, but I could use less stress. Many times we're unprepared to handle those financial emergencies. So keeping an emergency stash of money in a dedicated emergency account, not one that you're planning to go shopping with, it's one of the best ways to prepare yourself. Another could even be a line of credit, maybe a home equity line of credit. It'll help, as long as you've got enough equity in the home. So that might be something you may not necessarily be able to establish right away, but something that you could consider to lean on in an emergency. If you're a homeowner, you will have homeowners insurance that can cover the losses and damages to the residents, along with furnishings and assets in the home. Homeowners insurance provides that liability coverage against those accidents on the home or property. But what happens when your insurance doesn't cover you completely? It can happen. Or maybe there's a deductible. $1,000 deductible can wreak havoc on your finances if you're not prepared. We just had that happen in a pretty bad windstorm several years back where it blew off the back half of our roof. Granted, our insurance covered it. We did have $1,000 deductible. It was better than I can't even remember how much it was, 6,000, 7,000 that we would have had to pay if we didn't put in an insurance claim. What about replacing a broken window? Even the cost with installation, it may be less than the deductible, so you wouldn't necessarily claim it on your homeowner's insurance, so that's an out-of-pocket expense. Or again, what if that septic backs up into your house? It doesn't necessarily mean you have to have the whole septic replaced, but you're going to have some serious cleaning, right?
Mm-hmm.
Imagine if your hot water tank suddenly stops working, or worse, the furnace. A lot of times, the furnaces might be serviced and they might be up to date, but it could be a couple of years and suddenly you might have to replace a furnace. Do you have them repaired or replaced? What about a tree branch falling into your garage door? We just want you to think about these things. We can't stress enough the importance of an emergency fund. Contribute to it regularly, just like you contribute to retirement, just like you contribute to your vacation fund. It can just help ease the burden of most financial emergency situations. I always love the one with the stove on fire. We've had that happen before. Can't say that it was me cooking, but it has happened. All right. And finally, the anticipated investments. No one wants to buy a house and immediately have to spend money on repairs. However, being prepared in that anticipation of needing some sort of repairs within the first couple of years of home ownership. One of our own team members, one of our own coaches, when he purchased his house, the first winter, there was a gap between the bottom of the back double doors and the floor, but it wasn't noticeable until it snowed. He had to replace the whole back portion because fixing it wasn't an option the way it was hanging. Septics, many times new homeowners find themselves having to replace a septic system within, a couple of years of buying the home. Some septic systems can start at 3,000 or 4,000 and some can climb over 10,000 or even more, depending on where you're at. A roof, we all need a roof over our heads. And sometimes the home you buy will just have had its roof replaced and you're good for another 10 years. Other times the roof may have some life left in it. But so it's best to have some money just set aside for potential replacement, just keeping tabs on what's the age of things in the home. Windows and doors, as a house ages and settles, windows may start to crack. Maybe the shifts in the frames might cause some gaps, may cause you to lose some of your heating expenses, right? Because you're losing that heat out those sources. Maybe if you're handy, you can replace one at a time, but sometimes you may not be able to do that. You may have to replace all at the same time. And then consider hiring someone if you need to. Again, that's going to cost you a little bit more. Consider siding and painting. Are you able to do that on your own? Do you need to hire someone? Decking, may not be a necessity, but sometimes, you may have to replace an existing one. Sometimes it might be easier to get in and out of a place, with having a deck added or something, an entryway. And then driveways. Living in the Northeast, many of our paved driveways suffer from frost heaves, causing cracks and further damage. So yearly driveway sealing may be in your home's future. So just again, we want you to consider these things when you're looking at these places as you're preparing yourself to be a homeowner. Consider that you may just need to keep putting money aside. Can't stress that enough. And then, do you want to touch on this one?
Sure, I can touch on it briefly.
Okay.
So, I know through the Habitat program, it's a single family home, but if you don't qualify through the Habitat program and you are still considering, you're on here because you're just looking for educational pieces of what it takes. And if you're considering multifamily units, livings on one side and renting the other side, being a landlord / tenant, you may be considering purchasing a multifamily unit, right? Or possibly a duplex. Maybe you'll live on one side or live on the other side. Having that rental income, though, can be so helpful to help offset your monthly budget. So if you're thinking of home ownership, looking at a multifamily unit or duplex might not be a bad idea. Or maybe you're thinking about just having just rental income. It's possible just to consider a commercial property. However, look at it now as a landlord, and you will have additional responsibilities. So yeah, you're buying a multifamily property, but you still are the landlord. You're still going to have to mow the lawn. You're still going to have to do the snow removal. If the water heater breaks, you're still going to have to replace it. It's still going to be your responsibility. So even if you're looking at that, it's great for that additional income as a landlord. It'll help you pay down the mortgage, but you are still responsible for those things. You're fine, Steph. You're still responsible for those things. If you rented an apartment or a house before, as a tenant, you could simply just call your landlord. That's what you will become when you consider duplexes and thinking about being a landlord / tenant of that duplex.
Thank you.
No problem.
All right, so coaching. This is where it's available to any member of our community. So Greylock with branches in Berkshire County in Massachusetts, and now in our Greenport Hudson area of Columbia County, New York. Coaching is available for free to any community member. You do not have to have accounts with Greylock in order to get coaching. So if you wanted to do an assessment to see where you're at, we highly recommend, chatting with someone. As Shanatia mentioned, she is a coach in addition to being a branch manager, and we've got a full team of coaches that are available even throughout the rest of our branches. I think we're up to like 29 or 30 coaches, something like that. So we can do phone coaching, we can meet by Zoom, and if we're able to get to the branch to meet you in person, we'd be happy to do that as well. But highly recommend that you guys do a financial wellness check just to see where you're at and where you want to go from there. And right now, you even have access to our website, greylock.org, our Community Empowerment Center. So if you add the /CEC, gives you access to all of our community programs, all of our online classes, our in-person classes, financial literacy. We have a Bonsai financial literacy program that's available to you. There's calculators, how much house can I afford? Like when Shanatia was going over the percentages of the 28-36%. But right on our financial wellness section, greylock.org/CEC, there is a self-assessment tool that you can even access right now, literally. This is answering just a few questions. I think it's 8 to be specific. It basically gives you opportunities to answer, in this category, it's talking about, I spent much less, equal to my income, more. Through these questions, it'll give you an assessment, and it'll give you immediate access to some of the tools and calculators and ways that you might be able to get started on your own. But I highly recommend taking that free quiz. It is anonymous. If you want results emailed to you, that would be the only time, information would be input. But that is accessible to you even as we speak. And then if you wanted to chat more about general mortgages, Shanatia and her team are available at the Greenport Hudson branch. And then just generally speaking about mortgage lending, you can speak to anyone in our mortgage team, but you can also visit the branch in person and say hello. All right. You guys have been fabulous tonight. We appreciate all of the time you have spent with us this evening. If you haven't had an opportunity to ask your questions, we definitely invite you to do so now. If there's anything that's come up, anything more specific, if you want to chat offline, we can also set something up as well. But we hope that we've given you at least some knowledge to better arm yourself to be prepared for that homeownership journey. And wherever you are on that journey currently, just beginning, partway through, or maybe thinking that you're close to being ready, we hope we can help give you some guidance. And I, as a participant in our Pittsfield location of Habitat for Humanity, participating in any of the builds, volunteering your time is a great way to learn about the organization. I can't stress that enough. Highly recommend get involved. Learn more about it for sure. It's very rewarding. I know I've gotten a chance to learn a lot about tools and equipment, and didn't think I'd ever be up on top of a roof laying plywood, but there I was. Very empowering. So I highly recommend get involved in your local chapter.
All right. Thank you, Stephanie and Tia and Al. And I just seen that nobody has put any questions in the question and answer or the chat box. If anybody wanted to ask anything, they could also raise their hand in the next 30 seconds or so. And we'll let you speak. We'll unmute you so you could talk directly.
And I can point out too, I know we'll be promoting it as well. Our next session with all of you guys on tonight is Tuesday, September 27th at 6:00 p.m. So we'll do the same sort of format. And then we're gonna, I think, lead off with budgeting because we think that's super important. And then we'll be rotating around with credit and things after that.
Yes.
Excellent. All right, well, we haven't had any questions, comments, chats, or hands raised, so I'm assuming that means everybody is good.
And definitely reach out if you have any questions, whether it's to, you know, Toby with the Libraries Association, or Al with Habitat, or Tia or myself with Greylock. But we'd be happy to answer your questions at any time. So thank you.
And as Stephanie mentioned, we are going to be doing this in a series on the last Tuesday of every month. And after the financial workshops are finished, we will continue with other topics. And just so you know, since Stephanie mentioned tools and things like that, the Philmont Library does have a tool library where you can come and borrow tools for a week's amount of time. If you don't have, say, a power drill, we do. You can come borrow that. If you need a rototiller to create a garden, we have that too. So there's lots of different things that you can borrow. So it shouldn't be a scary thing that, oh my gosh, I've bought a house and now I don't know how to fix it.
That's fantastic.
On that too.
Yes.
That's fantastic.
cool.
Awesome.
All right. Well, thank you, everyone. Have a really
Take
good
care,
night.
everybody.
Thank you. Have a good
So,
night.
Thank you, everyone. Have a good night.
Happy Labor Day.
Night.
Yeah.
Same to
Be
you.
safe. Be safe. All right.
Right.
Bye now.
Bye.